The UK's Office for National Statistics has confirmed that in the first quarter of 2025, the country's gross domestic product grew by 0.7%, unchanged from initial estimates.
This growth was mainly driven by a 0.7% rise in the services sector, a 1.3% increase in industrial production, and a modest 0.3% growth in construction.
On the expenditure side, the economy was supported by higher investment, a positive trade balance, and stronger household consumption.
Nominal GDP grew by 1.5%, mainly fueled by rising employee compensation. Real GDP per head increased by 0.6%, slightly better than first estimated.
However, real household disposable income per head dropped by 1% in the latest quarter, following a rise in the previous period.
The household savings ratio also declined by 1.1 percentage points, falling to 10.9%.
On a monthly basis, GDP shrank by 0.3% in April, mostly due to lower output in the services sector.
The services sector recorded a 0.7% increase in the first quarter, with administrative and support services making the strongest contribution. Industrial production rose by 1.3%, mainly driven by growth in machinery and automotive manufacturing.
Construction grew by 0.3%, while exports climbed by 3.3%, especially in goods. Imports increased at a slower pace.
The UK's nominal income rose by 1.5%, boosted by higher wages and employer contributions. Taxes, particularly VAT, also increased, strengthening public finances.
Nevertheless, real household disposable income per head fell by 1% and the savings ratio dropped, reflecting higher living costs, notably fuel, rent, and dining out.
The UK's trade deficit stood at 1.7% of GDP, but narrowed to 1% when excluding gold and other precious metals.
Compared to other G7 countries, the UK posted stronger growth than Germany, France, or Italy, but lagged behind the United States.
Finance Minister Rachel Reeves called the latest figures disappointing. With the economy shrinking in both April and May, the pressure on the government is mounting.
Analysts warn that Britain's economic growth remains fragile, even though the country avoided recession in the first half of the year.
An interest rate cut is now widely expected in August, possibly followed by more reductions in the autumn, moves that could give the economy a much-needed boost.
Economists also caution that the government faces tough choices on raising taxes or cutting spending if it wants to stick to its fiscal rules.